Welcome back, everyone. Today we're diving deep into the fascinating world of Indian NBFCs. Specifically, we're putting Manappuram Finance under the microscope. They're India's second largest gold loan NBFC, and right now, they're sitting right at their 52-week high, trading around 324 rupees a share. But, beneath that shiny surface-level success, there's a really complex, almost split-personality narrative playing out on their balance sheet. It's literally a tale of two completely different lending businesses living under one single roof.
So this brings us to the multi-crore question, right? With a surging stock price but also a massive recent collapse in profits, is Manappuram just a value trap luring us in with past glory? Or are we looking at a golden opportunity right on the cusp of a major turnaround? Well, to figure that out, we have to look way past the stock ticker and dig directly into their core business realities.
Okay, let's dive into this. $5,000. That is the massive macro tailwind driving their core business today. Gold prices have been absolutely crushing it, hitting record highs and crossing that $5,000 an ounce mark early in 2026. For a gold loan company, this is the ultimate catalyst. Higher gold prices mean existing customers can just take out much larger loans against the exact same jewelry. It basically allows Manappuram to massively expand its loan book without having to hustle to acquire a single new customer. It's huge.
So here's our roadmap for today's explainer. First, we'll look at their strategic inflection. Second, the gold loan engine. Third, the Asirvad microfinance crisis. Fourth, financial health and flags. And fifth, we'll wrap up with valuation and our investment thesis.
Starting with Section 1, Manappuram's strategic inflection.
Right now, Manappuram is navigating a really profound strategic shift. They're aggressively repositioning the weight of their portfolio. The data shows them rapidly returning to their roots. Just look at this mix. As of Q4 FY26, gold loans dominate a record 80% of their roughly 63,000 crore total assets under management. Compare that to their microfinance segment, Asirvad, which has shrunk down to just 9%. They're actively shrinking the problematic parts of their business and just letting the gold segment run wild. It is a massive pivot in their corporate strategy.
Moving on to Section 2, the gold loan engine. 99.1%. Let that sink in. That is the staggering year-over-year growth figure for Manappuram's standalone gold business in Q4 FY26. They nearly doubled their gold loan book in a single year, ballooning to roughly 51,000 crores. This explosive growth is being fueled directly by that gold price supercycle we just talked about, combined with their incredible network of over 4,000 branches serving rural and semi-urban India. They are firing on all cylinders, to say the least.
But here is the absolutely crucial point, this stark contrast. On one hand, you have the safe, booming gold business. It uses self-liquidating physical collateral, meaning if a borrower defaults, Manappuram just auctions off the gold. Easy. Because of that, their gross non-performing assets, or GNPAs, stay safely under 3%. But on the other hand, you have their problem child, Asirvad Microfinance. This is unsecured lending, no collateral. So when things go wrong here, they go terribly wrong, which resulted in a frankly shocking 8.54% GNPA in FY25.
Which leads us nicely into Section 3, the Asirvad microfinance crisis.
Walking through the timeline of this mess, in October 2024, the RBI actually stepped in and halted Asirvad's lending entirely because of excessive pricing. The loan book just completely collapsed. Fortunately, the RBI lifted that restriction a few months later in January 2025 after the company took some serious remedial measures. Now, the resulting credit costs were absolutely brutal. It caused the company to post its first ever quarterly loss. But fast forward to May 2026, and they managed to pull off a V-shaped earnings turnaround, posting a 405 crore rupee profit after tax for Q4 FY26.
Okay, let's put on our detective hats for Section 4, financial health and flags.
When we evaluate our red flag scorecard, the logic is pretty clear. That microfinance credit cycle triggered some very real financial flags. I mean, Asirvad's 8.54% GNPA, massive red flag. The subsequent drop in overall return on assets to 2.5%, another red flag. But when we look at corporate governance, they actually pass with flying colors. The accounting remains fundamentally honest and they're audited by a KPMG affiliate. So thankfully, there's no sign of bogus revenue or any hidden subsidiary tricks going on here.
And check this out, a 0% promoter pledge. This brilliantly illustrates ultimate founder confidence. For an Indian NBFC, this is basically the gold standard for corporate governance. The founding Padmanabhan family holds a steady 35.25% stake, and they haven't pledged a single share. They have serious skin in the game. What that tells us is that the microfinance disaster was a strategic miscalculation, not some sort of deep integrity or fraud issue. Now, that strategic miscalculation did cause a 45% profit collapse, dropping from nearly 2,200 crores in FY24 down to 1,200 crores in FY25. But I really want to reiterate this point. This was a cyclical earnings quality problem. It was not a structural solvency issue. Their capital adequacy ratio remains safely above 21%, so they absolutely have the financial cushion needed to absorb that microfinance shock.
Finally, Section 5, Valuation and Investment Thesis.
Breaking down the metrics here, at a current market price of $324, Manappuram is trading at a price-to-book ratio of roughly 2.2x. Now, if you compare that to their premium rival Muthoot Finance, which trades closer to 4.5x, Manappuram looks incredibly cheap. But it trades at a discount for valid reasons, namely that low 2.5% return on assets caused by the whole microfinance track. Overall, our quantitative scoring model gives it a 67 out of 100, so it's a B-. Good, but for sure comes with some clear baggage.
And this data helps us build out 3 final valuation scenarios, mostly depending on whether that Asirvad arm stabilizes or deteriorates. In a bear case, where those microfinance losses persist, fair value sits around 200 rupees. That's a steep 38% drop. In our base case, where growth continues but margins take time to recover, fair value is 285 rupees. And in a bull case, where the microfinance arm fully normalizes right alongside these surging gold prices, we could easily see the stock hit 360 rupees.
Which brings us to our final analytical verdict. Because the stock is currently sitting right at its 52-week high of 324, a lot of the good news regarding the gold cycle is already priced in. So right now, it's an accumulate or watch stock. You really want to look for price weakness and accumulate on dips between 260 and 285 rupees. That ensures you have a much better margin of safety just in case that microfinance recovery hits another speed bump.
Before we wrap up, I need to share this mandatory disclaimer. The analysis shared in this explainer is for educational and informational purposes only. I am not a SEBI-registered research analyst or investment advisor. Investing in the stock market involves significant risks. The data and charts shown are based on public information and my personal research notes. Please do not treat this as a buy or sell recommendation. Always conduct your own due diligence or consult with a SEBI-registered professional before making any financial decisions.
If you found this deep dive helpful and want to stay updated with more stress-free investing analysis, please hit the subscribe button and press the bell icon so you never miss an update.
I want to hear from you. Which Indian-listed company should I analyze next? Drop the stock name in the comments below, and it might be the subject of my next explainer.
So what do you think of Manappuram's dramatic shift back to gold? Is the microfinance arm just a temporary blip or a lasting headache? Think about it. Do your own research and make informed choices. Thank you for watching, and keep your investing stress-free.